Can you hear me now?
What's going on, Greg?
Another day in paradise, Ash. Another day in paradise. Close this. What is this? We're just waiting for Matt.
Yep.
Hey, Matt.
Hi, can you hear me?
Yeah, perfect.
We can.
Okay.
Yeah, I see you're in the conference room.
Well, those little quiet rooms right next to the lobby area.
Hold on a second. I gotta
The
send Nick over.
yellow color.
One number here.
I'm just lounging, Greg. Can I
like
can I
it.
lounge today?
I like it. Actual starts started.
All right, cool. Lots to talk about today, gents. Everybody, welcome to the 17th of May, 2023. The day of housing starts, a day that we all like to talk about and look at information that already happened a month ago. So, Greg, I saw where you put out on LinkedIn that home builders confidence is up 5 months in a row,
Yep.
which I'm not sure what that means. Does that just mean they're really excited about it for 5 months?
Well, I mean, the home builder confidence number measures a number of different factors, like traffic flow. I'm gonna try to look at the complete number, but it measures a bunch of different factors affecting like new homes, and they come up with a confidence factor. I mean, 50 is a number below 50 means that they're not very confident, and numbers over 50 mean they're very confident. If we look back over the last several years, so the number hit a low point in the fall, in I think October or November, right? So they had very little confidence in what this year was going to bring, and things have exceeded their expectations for the first 4+ months of the year. So that's why that number's come back up. If you think back when we were peaking, home builder confidence was like at 75 or 80, back this time last year, right? Yeah. Or I didn't take that back. It was earlier in the year. It started to fall after they increased interest rates. But
where is it now?
It's 50. It's 50.
Yeah. We're back to average.
But been, like I said, been up 5 months in a row. I was just. Do you want to do an intro, Ash, and then we can I got numbers.
Yeah, so
I got numbers, baby.
A couple of things I want to talk about today. We're going to talk about housing starts, the cash market. The old future's gone, new future's coming in. I had somebody send me a Twitter today wondering why the price of the new futures contract is so much higher than the old futures contract. So I'm hoping people that are asking that question aren't trading it yet. Unless actually, maybe I hope they are, because then that gives good liquidity to all the rest of us. But it's a good question. So either it wasn't explained real well yet, or people didn't go look for an explanation, right? So we'll talk about that, a little bit about logistics, other things. Home Depot's earnings came out this week. So we could talk a little bit about that and what we saw in those. But that's kind of the introduction. I think the overall sentiment that I see out there is wildly sideways right now, if that makes sense. I mean, if you're one of those people that is negative about stuff all the time in this market, you're going to be negative. If you're one of those people that's positive all the time, you're going to look for the positive stuff. And meanwhile, just looking at all the social media interactions going out there on Twitter, LinkedIn, everywhere else, there's a lot of talk out there, but I don't see us going anywhere special right now. Now, Greg, you and
That's
I.
That's a really good sign, Ashley. You know,
It is a good sign. And you and I
very
talked.
positive.
You and I talked, and I talked to Matt. It's like, hey, look it. I will tell you one thing I'm a little surprised about is not surprised. People that have been in business a long time, have good contacts, and have a good book, are moving lumber right now. Matt, you and I talked last Friday and Thursday, and you're like, and I talked to Greg and a couple other people. Like, surprisingly, I moved a lot of lumber today, is what I kept hearing people say, and that's a good freaking sign to me.
Excuse me.
That's a good freaking sign to me. EAKIN.
It's a family show, Ashley. It's a family show. Come on.
Yeah,
Come on.
so it's a good sign. So that's kind of the intro. So what I was going to do is have Nick bring up the first page of the residential construction, and we can kind of take a look at it. We'll look at page 1 here, which shows. There we go. So we'll just give the raw on building permits 1.416, housing starts 1.401. Housing completions 1.375. Let's dig into it a little bit, Greg and Matt. What do you all see it? What's your thought there, Greg?
Well, the first thing that I'll tell you is that the actual, if you just go with the not seasonally adjusted, not seasonally adjusted from March to April. I mean, housing starts were up 12%. I mean, we've got a year-to-date number right now on housing starts. Year-to-date from last year, starts are down 20%. But we're on a run rate of like mid 1.3 million, which if I go back pre-pandemic, hey, that's a very healthy number. I mean, the things that we're not dealing with right now is we're not dealing with severe out of stock issues for all sorts of products that the supply chain, quote unquote. It's a really good time to be a home builder, and that's evidenced by looking at home builder stocks, which are back up, approaching their highs. And it's also really good for those companies that supply home builders, because the Builders First Source is up at a new is that at a new high today? Hang on, stand by. Let's take a look. Builders First Source today. BLDR, where are you? I lost you. Oh,
hey, Greg,
we are. 100, yeah. 120, a new new all-time high. It's up year to date. Let's see. We started the year at like 70, and we're at 120. Hang on a second. 50 divided by 70. Builders First Source up 70% year to date. They supply single family home builders, big national builders.
Great call. Hey, just so I know, Greg, you made a comment about non-seasonally adjusted. So when I look at the non-seasonally adjusted on page 3, it says February was at 111, 131 on March, and 117.4 on April. So is that down for April, or is that
housing starts not seasonally adjusted? January 97, February 103, March 113, April 127.
Okay, I'm looking at table 1B, the not seasonally adjusted. Am I looking at the wrong thing?
Yeah.
Mm-hmm.
Yep.
I mean, the trend is our friend, right?
That's a permit number, Ash. So permits.
I got you. So permits
were down. Permits were down, which was driven by a 22% drop in multifamily, which means very little on a seasonally adjusted, because those numbers, the variable from month to month. It's like when you have a big month of multifamily, the next month you have a lower, because it's you don't start a multifamily project and then start another one the next month. It takes 3-6 months to work through that.
For sure, good point. And one of the things you always like to look at is completions. Did you guys look at completions to see?
I did. I mean, completions fell back, after being higher than starts for the last number of months, they fell back. I mean, there's still 1.675 million units under construction. So you think about that, is if you're building at 1.3 million pace and you've got 1.67, I'm just going to do the math. I'm going to say that's more than a year's worth of starts are under construction.
Good point.
And we're completing them at a pace of about 1.4 million.
James Breck was asking, what's the actual starts year over year?
Actual starts year over year are down, not
30%.
not seasonally adjusted, are down, not seasonally adjusted, down 20%. Mm-hmm.
And how much lumber demand does that difference represent? Is his other
that would be several billion board feet, I'd imagine.
Let's say, well, I mean, if you get 27,
it's a lot.
It's probably about 8 to 10 billion board feet of lumber less.
Probably more than's been taken out of production so far. But
I mean, that includes panels also. So you would have to go like half that, probably 5 or 6 billion board feet of production that we don't need. And then, or we're not going to need, like the mills won't need to produce, or we won't need to import. But one of the things about the starts, the information that I was interested in, that I saw the report this morning, was that if you look at the top 4 states for starts, 16% in Texas, 14% in Florida. Those 2 states represent almost a third of every single new home start in the country. And then you have North Carolina at 8%, and I think California is 6%. So interesting to me that's the way things are going. It's a migration to the warmer southern states, really, is what it boils down to.
Well, migration to warmer southern states, and except carving California out there, I'm guessing that most of those states don't have state income tax.
I don't know about North Carolina. I know about Texas, and Greg knows about Florida. I know about Texas, but California, I think, would be higher, but they're having an exodus. They're actually losing population right now, and they're losing wealth to those other states. But that's still a huge economy all by themselves.
Yeah, I mean, I guess if I'm going to generalize on, the starts,
maybe about the same size, a little bit bigger than the nation of Canada, if you just compare their GDP and the number of people they have.
Did you guys hear that?
Yeah, it was weird. It was like this was a test by the National Broadcast System.
It's all good. We're good
now. Sorry. So, some guys buzzing in.
So Ash, I see you're repping another company there. You want to talk about it?
Yeah, I'm just repping Stinson Dean's Deacon Lumber shirt. I bought this retro throwback shirt off of Twitter. Digitally, I clicked on a link. It double-clicked on my Apple Pay, and it showed up at my front door. So,
so I don't know. Did anybody have a chance to watch David Faber's interview of Elon Musk yesterday? I was fascinated. It was awesome. When you he gave an interview, nothing off the table. And I mean, there was some parts of it which I was just I was blown away. I mean, number one is obviously he's he sends rockets up, building autonomous cars, AI. I mean, it was. I urge anybody and everybody to go find it and listen to it. There was some stuff in there. There was some stuff in there a couple times where he made really thoughtful comments and insightful.
I like the Princess Bride quote.
Yeah. He's a smart dude, man. There's a reason why he's successful.
That was great. Let's
bring it back to the cash market. So, Matt, great points you brought up. Texas, Florida, building. If you got customers there, you're moving trucks and cars every day. I had a little note here to talk about logistics. I follow a couple people on Twitter that are big logistical tech people, and I don't think used trucks have dropped substantially in price, where they have been going up for a long time. And per mile rates on most hauls now are almost at a multi-year low. Does that make sense? So
truck rates are back to pre-pandemic prices.
Pre-pandemic, great.
I mean, you know, like across the board, I don't know a lane that I'm not back to paying pre-pandemic prices. I mean, there may be a few here and there where there's an extra few $100s, you know, but by and large, all the way back.
So what is flowing when there's deals out there? They're getting picked up. They're moving. I mean, so Matt, you deal a lot in Western spruce, U.S. species. A lot of it going to Texas. You do a lot of low grade. What's your little pig farm doing right now?
You know, I'm actually, you know, I've been talking about this for a month, but I looked at my inventory today and I have like 5 trucks, a 2x4 number 3 on the ground, and I have all the rest of my inventory is number 2 or Euro. And so those prices have completely just run into each other. And so if I have the option of stocking a higher grade at the same price as the low grade, then that's what I've been doing. And the flow of material is just fine. It's not like a record setting pace or anything, but it's definitely better than average. And I guess I would call it surprisingly steady and surprisingly good at my desk on my truck business. Now, talking about actual freight, our freight as a company up and down the West Coast is back to, like what Greg said, back to normal, pre-pandemic prices. And we've actually had some trucking companies reaching out to us for the first time in 3 years, you know, looking for new business, new customers. So that's a sign of the times. There's some capacity out there that's not being utilized. Now, if we could just get the railroads to adopt some similar strategies, all I know is we keep paying more and more and more for rail service, and there's going to be another increase from the CN here on June 1st, which I can't wait to see. You know what we're paying right now to go, like, from, you know what it costs, like any Western spruce mill to go from like the Prince George region down to, say, Texas, roughly somewhere between $140 and $150 per thousand. It's a bigger number than you can imagine, right? I mean, think about that.
Yeah.
And one of the things that you know, and that, I mean, that's up from like, you know, $100 5 years ago, 6 years ago. Right?
It wasn't even that long ago, buddy. I mean, might have been. I mean, I had a contract, a VMI that I was doing for a guy down there on rail cars of number 3 years ago. I think our agreed freight was like 112. So I mean, it's up $30 to $40 in 3+ years.
So one of the things that I'm seeing up and down the East Coast is that, I mean, now the truck freight is like substantially more competitive than the rail rate. We just actually canceled, you know, commitment for the balance of the year for cars that we're going to ship by truck.
Yeah. That's a great point, Greg. I was just thinking.
You know, how long is that going to last? Is that going to boomerang back? You know, I don't know. I mean, it's certainly something that's going to have an impact on market.
Great. Hey, Matt, it was funny while you were talking about what you were doing. Well, first of all, Greg, so we covered Matt's. Greg, you've got a lot. You cover a lot of markets east of the Mississippi. You put wood in Detroit. You've got a bunch of wood in ports, all in Florida, up in the Carolinas, and then your big warehouses are up in the Northeast where you ship to people, multifamily and retail. What are you seeing out there? You live a lot in that eastern spruce market, which you know trades a lot. What are you hearing there? What are the items that are trading? What are the items that are not trading? What's the feedback at the mills? Besides, we are really busy today and selling a lot of lumber.
So
we all got used to that over our careers, haven't we?
I mean, you know, like the comment that I've continued to make is, it's, you know, every day there's lots of wood moving, but prices are not changing. You know, there may be, you know, there's a couple of items, overvalued items are are easing up a little more. You know, your 2x6 in random 9s and 10s, those keep easing up. 2x4, 8s and 9s are actually the strongest items, and probably continuing 2x4 16s are by far the weakest item. I guess I'd say from the euro perspective is, I continue. I mean, I had another report yesterday that inbound is dropped by 50%. So, we're in this place right now where the wood that's at the dock, there's a high degree of incentive to get that sold and shipped, and that's pressuring the market. But what's behind it is half as much as what came in late fourth quarter and early first quarter.
So I never give any advice. None of us do, and don't listen to our advice because we're just three dudes talking. But man, what about buying a whole bunch of 2x4 16s, putting them somewhere and selling July or September against it?
I mean, there are basis trading opportunities. I mean, if you want to segue into talking about old contract, new contract. I mean,
well, yeah, let's do that, because I got a thing here: futures, old contract, new contract. That person asked me a question, and I'll juxtapose that with Matt and I talking just BSing the other day while I was walking the dog, and Matt's like, Matt, correct me if I'm wrong on this. You're like, dude, we give away a lot of information on here, and I'm not sure I really want to give away that much information, because if you would have watched our show for the last year, Greg called the top of the market, and you, Matt, kind of called the bottom of the market, and we showed the number 3 trades, and we showed stuff that if people
we're really good. Yeah. So, I mean, tell me something we didn't know already. Come on.
When and if we're wrong, which we are sometimes, we self-correct pretty quickly. But all we can do is with the information that we've got in front of us and the experience. But like Matt, you were saying, if people would have watched and taken advice in this, in any type of volumetric situation, that was millions of dollars, man.
Maybe. I mean, it just depends on how they look. I always say we can talk about it all day long, and we can have fanciful discussions about theories and market relations, but at the end of the day, it's what you do, right? It's like people that talk about futures but never trade futures. Well, I mean, when you trade futures, then you understand, right? Because guarantee you, I mean, as a guy that's traded futures for over 20 years, I'm not always right. I get my teeth kicked in once in a while, and that's just the nature of it. But you learn from those situations, and hopefully you don't repeat that same mistake in the future. As far as the futures contract, the new contract, to solve the mystery of why it's a higher number, it's very straightforward. It's a truck contract. It's based on truck prices delivered to the Chicago metro area, and then basically you have to include the $108 freight roughly from Prince George to the Chicago region. That's the difference between the two contracts.
And Matt, good things that Greg and I brought.
Well, now, just one thing, Matt. It's still a carload delivered contract. It just trades in truckload quantity.
Right. No, I mean, you have to settle out 4 at a time. I get that. But I mean, for anyone that is looking at the contract, they call it the mini contract because it's one truckload quantity. And that price is based on the price that you'll see September's 5 1/4, something like that. That is what the market thinks a truck of 2x4 spruce delivered to the Chicago metro area would be on September 15th. It's not the rail car FOB Prince George price anymore. So that's the difference is about $110 roughly.
So is that about a $75 discount to the cash market right now?
$50. Well, I'm saying July's 50. July's 505. So
yeah, you got about a $50 basis there, don't you? On random.
I mean, I guess the thing you got to look at is that I mean, Eastern actually delivers into the Midwest at a lower price. So
Eastern
people have to start looking at what does Eastern spruce deliver into Chicago for, not what is Western spruce, because as Western spruce production becomes smaller and smaller and its market area gets farther, pushed farther west, it's really going to be Eastern spruce is going to be the thing that's going to be the market determinant.
So Greg, where's 4-inch Great Lakes, or where's 4-inch Eastern out of Quebec or Ontario delivered into Chicago now?
I mean, what was print last night? I think print was 440.
Well, where can you actually buy it? Where can you actually buy it out in volume?
I think that's pretty accurate. I mean, the prices have tightened up considerably. The market's pretty tight right here. Mills give up very grudgingly at this point.
Well, but that's a 335 Prince George equivalent. So everything's kind of circling that 335, 345 area, right? Old CME related, right?
Right. Yeah. So you've got, $70 basis right there for July and $90 for September. That's pretty good basis in my life.
So somebody was asking on here, has to be a gamble time again, gentlemen. We say, do you see small operations, new blood, taking contracts that could spike prices and demand? I think what he's asking is, do you see more people trading this? I have not looked at the open interest today. I mean,
open interest is just under 6,000, which would be equivalent of 1,500 old, which is kind of that's the low end that the contract trades at.
Yeah.
In terms of total open interest.
Yeah. So are there going to be new people come in? I mean, I hope so. Because come on in, the water's warm, right? I don't know how many people will be in speculating outside of the industry that haven't been in before, unless they see some reason to want exposure to lumber that they haven't had the old contract.
The one thing that could help the new contract is the species mix that you can ship to settle, right? So you can ship from the Eastern spruce mills. So if you own an Eastern spruce mill and you produce Dimension 2 before 2 and butter, you can now go sell the July contract with the intention of shipping it, and actually satisfy that process, where in previous contract, it was based on Western Prince George. It was trickier for the Eastern mills to deliver it. They could maybe do it through the XPIT process. I'm not sure exactly how that worked, but Greg probably would know.
Well,
that's what the ones that participated did it via XPIT. This just streamlines the process, and it brings in more production. Because BC's production continues to fall, bringing in the Eastern production, we've got more production involved in the contract. I think it's a positive.
Just so you know, there were EFPs in the old. There were EFPs in the old legacy contract in May and in the new contract in May. So yes, it's a carload delivered, but you can EFP trucks too. You can have one contract of July right now and EFP Southern Pine for it if you want to.
I've EFP trucks before, out of my inventory. So you can EFP just about anything, really. The rules on EFP are pretty much wide open. But as far as shipping the contract or delivering the contract, the Eastern mills now can do that officially. So can Hampton. I mean, we could ship some Western hemp fir over there and satisfy that contract. And so could Potlatch or Bennett out of the inland, or IFG. They could do the same thing. So basically, all the producing regions besides Yellow Pine can now ship that contract at time of completion.
Yeah, and Matt, if I remember right, you can actually ship hemlock now too.
You can ship any Western species, plus Eastern spruce, and you can't ship Yellow Pine. That's the only. I mean, it's a big change. I don't know if people will really jump on it. I'm not sure that like Hampton or Sierra or anyone out west here is like chomping at the bit to just flood the CME with Western hemp fir on July 15th.
Here's a couple of good questions. Alabar saying ask builders if they're going to use it. Alabar, you sent me a DM. The reason, if you want to know more about that, our business does a really good job at isolating both ends of the chain. And a lot of people live in the middle of it, and they don't want builders to know how to do it. so that's the way everybody's always been. And builders really sometimes don't want to know how to do it. So they insulate themselves by using brokers and different people to do it.
Hey, Matt, can you answer? What are you showing the coast freight now on Hemfer to Chicago? 100?
It's pretty much the same as BC. It's like 110.
Oh, it is. Okay, it is 110.
Just figure our freights are the same as the BC mills, and the inland guys are probably like 85 to 95 freight. So from Idaho and Eastern Washington.
Here's one more question. Realistically, guys, how many people who buy futures actually take delivery of the product rather than settling the contract? Well, because
a healthy market has a very small number,
right?
But you can tell you that right now is like what the market went off. There was 22 cars still open for old May, and there's 60, which is 15 cars in new May.
Probably less than 5%, right?
I mean, it's in terms of total like contracts traded, it's a minute number, which is what it should be. A healthy functioning market should have no deliveries.
It's a good way to get set up with a mill, though, if you're not doing business with them.
Okay.
But you're right, Greg. We went one time we went for a long streak there, 3 or 4 contracts where they went off flat almost, right? A couple of years back.
Yeah, I suspect that over the next day or two, these will clean up through the EFP process.
Yeah, but really, the EFP process is potentially a great new option for this truckload contract, and I think anybody in the industry, Southern Pine Mills, Europeans, everybody should look at how to EFP lumber and figure it out, because it certainly can help the whole industry.
In a product that has 40% annual average volatility, that's taking out, the last 3 years that had 150 to 200% annual volatility. The risk management is an essential tool to any business in the chain. Just think if some of these banks had used some appropriate risk management strategies, they'd still be in business.
I think they're looking at it now, right?
Yeah. That's
one other thing I want to talk.
It's like we used to always say, Ash, is like when people go there's no risk management strategy that can deal with stupidity.
Well, look, I used to get the call at all the companies I was at, and it would start out like this. After the market's moved $100 or $200, it'd be like, hey, we took a whole bunch of business under the market and it's up higher now. Can you help us manage that?
Not now.
Yes, I can, Mr. Galakowicz.
One thing I wanted to talk about was the Home Depot earnings that came out. So I tried to dig into them a little bit. It looked like, I'll broad brush this, and I could be wrong, building materials and other things were down. Probably one because of price shrinkage, because of just going from 4-digit numbers down to low 3-digit numbers, right? That's what
they cited. They cited lumber deflation on their earnings call as a headwind.
Now, I think volume wise, I'll have to see. I don't know if I could dig into what the units are, and where they were down was like grills and garden stuff and that. Does that mean that for right now, because of where we're at, that the consumer's a little tapped on certain things?
For sure, the consumer's tapped. I mean, we have record high credit card debt right now, and the cost of living is just going up, right? We have extended period of time with high inflation, and most of that inflation is affecting the consumer and consumer goods. So if you look at our industry, we've seen deflation, right? The cost of trucking has gone down. The cost of raw materials has gone down. The only thing that's up in our industry is the cost of labor
Absolutely.
and the cost of rail transportation, and energy costs are up, right? But if you look at the raw materials prices, so what we're paying for logs and what we're selling the end product for, those numbers are down. And then what we're paying truckers to move things around, those numbers are down too. What you look at your own personal life, when you and your wife go to the store to buy some groceries, you buy 4 bags of groceries that used to cost you $100, now it costs you $200 or $150.
I just bought two bags home about half an hour ago. It was $148.45.
Right, exactly. So, I mean, I see this, if you go out and have lunch, it's $15 for lunch now, $20 for lunch. It used to be $5 or $10. When you fill up at the pump, it's $4 a gallon. I mean, Texas is $3 a gallon, but in Oregon and Illinois and California, it's $4 or $5 a gallon.
Yeah, right on.
And then, you look at what it costs for, like, airfare prices are up. Have you noticed that? Quite a bit.
Yeah.
So it just, people are going to strap down a little bit, and they're going to not buy a new grill. They're going to fix the grill they have, right? They're not going to go build a brand new deck unless they have to. They're going to power wash the deck they have and then restain it. So some of those things are going to be slowing down a little bit. I will say that the lumber usage by the home centers is still high, actually.
Yeah.
So the volume of sticks that they're turning through their system is still above last year, which is a pleasant surprise.
Well, I was in both Lowe's and Depot this weekend because I had a project around the house. I had to buy lumber, and looked like there was a lot of people still buying lumber, right?
Yeah.
One question, and I wanted to wait for Greg to get back to ask this. Somebody sent me a question, and this isn't political or anything. With the new deal in Florida, you mentioned this morning, Matt, how many starts are in Florida? 14%, I think. Are the job sites going to be affected by this labor bill that's going through the Florida deal? I mean, there's some questions there around that. Where is it E-Verify or what is that?
I don't know. I have no clue. Greg probably knows better than I do. I haven't been following the story.
Yeah, I don't know. I have no information about what you're referring to.
Yeah. Somebody put in our organization, Western Canadian Home Center business, our locations are experiencing a 70+% versus 2022 purchase deflation in commodity lumber and panels.
So they're down.
Yeah.
So their sales are down 70%?
It sounds like the dollar volume is down, right?
Well, yeah.
Am I reading that incorrectly, James, or am I reading that correctly?
I
guess the question is, what are unit sales percentage plus or minus versus dollar sales, right?
Yeah, our unit sales are up over last year. The dollar sales are way down, obviously. I mean, we're talking at this time last year, I was selling 2x4 number 3 for almost $1,400 per thousand. It's now trading for $1,000 less than that, $900, $1,000 less than that. Well, that's $100,000 of worth on one choo-choo train of
James,
2x4 number 3.
James just had he said volume flat, dollars down. And that makes sense. That makes sense. And I think volume flat in this market with uncertainty is pretty damn good. I mean, I know that sounds like that sums up what the market feels like right now, right?
Yeah. So what's going to make it change? That's my, enduring mystery question here is what's going to make the market get worse or better here in the next 90 days? And I just don't have a real good solid feel or answer for it myself. So I'm as curious as you guys are on that.
Greg and I were talking about that. Greg said it. I was rolling somewhere and we were talking on the phone and he said something like, just waiting for the next thing to happen to see where this market wants to go. Right. I don't know if
I feel like a passenger on a cruise ship. Like, hey, are we going to stop in Jamaica or are we going to stop at St. Kitts? I just like, you tell me.
As Elon Musk always says, the whatever happens is usually the most, has the most comedy behind it. So something's going to happen.
Yeah.
That we don't see coming. That's going to happen.
Well, I mean that there's this like I think I think of like like a couple of different quotes. I mean the one thing is that markets do what cause the most people the most amount of pain and suffering. And so if you can figure out what that is, then you can figure out what the market's going to do. And then the other that I think of is, for every action, there's an equal and opposite reaction. I think I was, surprised at the early year volatility that we had. Pleasantly surprised, don't mind you, pleasantly surprised. Because I expected after 22 and 21 and 22, with the wild volatility that we had, that we would have a long extended period of a flat market. And it feels like we're in that, and I kind of expect that to continue. I mean, one of the things that concerns me right now is that there has been an underlying feeling of, some sort of a summer rally. I've had that feeling, I mean, just thinking of historically, hey, you get into the week before Memorial Day, the rallies in June into summer shutdowns through mid-July, et cetera, et cetera. I guess I'm questioning that right now, given the backdrop of the banking situation, and what appears to be the while we have certainly, we still don't have good production numbers on how much lumber has been produced in the first part of this year. We should start to get some of that. I'll reach out to Russ and see if I can get it for next week. But, as we said, is if single family, if housing starts are down 20% year over year, how much board footage is that? And what the market's telling us is that we haven't taken out enough yet. Eventually, the market will take out too much, which will sow the seeds for the next rally, but we're not there yet.
Right. Yeah. So a lot of people
riddle me that, Batman.
So if you're sitting there, like a lot of the people that watch this, taking all the information that we have and then making it your own and bringing it back to your company and saying, so everybody in the chain, this is my feeling where we're at in pricing. We may not be going anywhere special, but could we all agree, or maybe not, that the next major move probably isn't down? Am I wrong there?
Yeah, I have no idea.
You are.
Okay. No, fair enough. Fair. Well, let's cash wise.
I mean, I guess the thing that concerns me right now is that thought process. What I want to hear,
because that's a thought
what
process.
I want to hear is people.
Right,
I want to hear people. I want to, if everybody says that I don't think prices can go up for the rest of the year, I'm a big bull then. I don't feel like we're there yet.
It's a good point.
I just feel like my only thing is so typically when we go through long periods of ambivalence, like we're in right now, where everybody just stops caring, something happens that'll shock that and cause people to overreact. That's been my experience in 30 years. But then the other thing that's possible, and this is the thing that I'm guarding against right now, which Greg just alluded to, would be everybody expects a rally and we don't get a rally. So what happens? People get disappointed and they just stop buying and they hide their PO books for a couple of weeks. Next thing you know, mills start looking around the room going, hey, phone stop ringing. Gonna have to make some lumber disappear. Get on the phone, call your buddy Johnny, see if he'll take 5 cars. And every mill starts doing that at the same time. Next thing you know, you're sub 300 on 2x4 and you're just giving lumber away and you're fighting for orders. And that could happen too. I don't feel like that's happening right now at all. I mean, we have a really orderly system going on here right now. And whether it's our inventory in the field or whether it's our mill inventory, we're keeping it moving. I mean, there has not been a problem over here yet. But what if there is? And so that's why I sell the board at a big premium when I can, right? It's simply to protect myself in case something goes against my plan. I don't think it's going to happen. I don't think we're going to have a massive sell-off, but what if it does? So that's why I'm willing to sell some, $50, $70, $90 premiums in the back months and just and just keep doing my business.
And remember, it's a different conversation having a $50 to $70 basis at $300 to $400 lumber than it is to having a $50 to $70 basis at $1,200 lumber.
Well, last year when it was $1,200, I was selling the board at $900. It was a $300 discount.
Yeah.
So, as a hedger, as an inventory manager, if I can sell premiums, I'm thrilled. It's exactly what I live for. And it's no fun selling discounts. Sometimes you have to do that. When we sold off in 2018, I had to sell discounts then too.
So I know me and Greg, we've talked off this about what we think is going to happen, but I don't really want to give all that information out for free. I think we're going to have to put that one. We're going to have to put that one behind the paywall.
Yeah.
And because if what we talked about off of this is really going to potentially happen, I don't want to throw it out for free. I think that's something that everybody should. So
are we talking about move? So are we moving? Are we moving over to Twitter Spaces, Ash? Is that the plan?
I've been researching the last 2 weeks, figuring out how to take this over to paywall. Where my thought is, we tease people with a little bit about what's going on in the market, and then we go into our paywall for the real meat and bones and meat and potatoes of what we really think. Because honestly, after our combined 750 years of experience and our ability to read the tea leaves and the charts, and Matt, you being one of the biggest guys in the Texas market, Greg, you being the king of contrarianism, so to speak.
Don't kid yourself. Greg's a plenty big trader himself.
Absolutely.
I look up to Greg.
Yeah.
All right.
Yeah.
Hey,
so anyway,
listen, guys, as always, it's awesome. Yeah. Let's I'm gonna get some production numbers for next week. Okay.
Yeah, let's see if we can get Russ maybe fired up and a couple other people. And as always, Matt, Greg, thank you so much, and we'll look forward to doing this again next week.
Yeah, guys, have a great day.
Hey guys, take care.